You guys ever think of getting a sponsor?
Sponsors are no fun.
Well, it depends on the sponsor.
You got Millennial Investments to sponsor us?
These are new.
I hope I didn't lose you, but I remember when I was a kid, I really wanted to be like a pro skater. I mean, I wanted to be sponsored, I wanted to have my name up on billboards, but I wasn't that good, so I decided to go to school, and with that, I wanted to go to college. However, in doing that, that required me to take on student debt. Being someone who's gone through this system, I want to share my thoughts on this, as well as why I think you should not pay off your student loans. Well, why you shouldn't pay them off as fast as possible. What it do, crew? My name is Ver, and I'm just an average millennial who happens to have student debt also. Last year in 2020, the CARES Act came out, and among many other things in it, student loan payments on federally backed student loans were halted, as well as interest rates gone down to zero. So I've been looking a little bit at my analytics on my channel, and for some reason, student loan videos happen to do really well on my channel. So for that reason, if we all just could, for the YouTube algorithm, obliterate the like button and talk about student loans. Before I get into why, let's talk about some of the general repayment terms on student loans. For federally backed student loans, the typical repayment term is 10 years. However, there are many people who might need a little bit more time to pay off their student loans, but there's definitely a population of people who want to pay down their student loans as fast as possible. But I do want to say this, there is nothing wrong with wanting to pay down your student loans in 10 years versus 5 years versus even more. But I would suggest there are certain factors that might make it very advantageous for an individual to pay them off in just the regular 10-year period. Since there currently is a moratorium on student loans and payments are deferred and interest rates are down to zero, there is a very applicable scenario where paying off your student loans as fast as you can now is valid, but there's also a reason why you shouldn't. So for the example that I just gave, let's talk about the 10-year repayment term on student loans, specifically for federally backed student loans. The reason why I would say pay off your student loans in 10 years versus aggressively paying them off in a faster amount of time is because of the flexibility. I know a few people who are on track to pay off their student loans in 1 to 2 years, and they're basically paying down their loans very aggressively. But in order to do that compared to a 10-year repayment term is that they're paying off their student loans a lot faster in bigger payments. The reason why I mentioned the standard term of 10 years is because the payment amounts per month on that term is a lot lower than if it was in 5 years or less. This would give the individual the ability to decide whether or not to pay more on a month-by-month basis versus having to stick to paying a high amount every single month. The reason why the lower payments are appealing is because a borrower can decide whether or not they can pay more for a given month, or they can take the difference and just save it or invest it or really do anything else with it. I do also know that there are some private loans which are not federally backed where you can basically bundle all your loans into one package and then shorten the amount of time to pay those loans back, but you're stuck on that, and those have interest rates versus right now, federally backed student loans don't have any. So that's a whole different topic. Think about it this way, an education is very important. I obviously value an education, but at the same time, no one's trying to purchase an expensive piece of paper from you, and it is a very illiquid asset. And just like I mentioned, having that extra cash flow will give you the ability to decide whether to save it, invest it, or decide if you want to pay down your student loans as fast as possible without having the burden of having to actually make that higher payment. It's worth to note because if you make a higher payment, like if you decide to make a higher payment than your minimum payment, all that money that you just paid in that higher payment is gone and they're paid into your loans. This is essentially the definition of flexibility with the lower payment amount. To better understand the situation, let's get into some examples. Let's take our example of the average amount of student debt for a 4-year degree as $30,000 with an average interest rate of about 4%. So let's take a look at the 10-year repayment term plan. You're going to be paying about $300 a month, and then over those 10 years, you'll be paying about $6,400 in interest. Compare that to a 5-year repayment term plan where you're paying almost $550 a month and only paying $3,100 in interest over the 5 years of those loans. Now you might be thinking 5 years is definitely appealing because one, you're paying less in interest over time, as well as it's only taking 5 years to pay off your loan. Yes, you will pay almost $3,300 more in interest if you take the 10-year option versus the 5, but here's the reason why I think you can have more money if you pay off your loans in 10 years. Say for these two examples, you as a borrower can afford the $550 a month, but you you decide to only pay $300 a month instead, and then you take that extra $150 and invest it in a broad index fund like the S&P 500 that averages a 7% rate of return adjusted for inflation with dividends reinvested. After those 10 years, you will have $0 in student loans, but you will have $41,500 saved and invested. Now let's look at the other case, and these numbers might be very surprising. So in this other case, you still can afford that $550 a month, but you aggressively pay down your student loans and just throw the $550 a month towards that for the first 5 years. After those 5 years, you will have $0 in student loans, but now you can invest that $550 in that same broad index fund. After those 5 years of investing, starting at year 5 to year 10, you'll have $0 in student loans, but you'll only have $38,000 saved and invested, which is a difference of $3,500. Now I know you're probably looking at these numbers like,
oh, once I pay off my student loans, I can afford more to invest.
But just looking at that $550 payment and that difference, these are the numbers that can come out. See how crazy that small difference of starting to invest at year 0 versus year 5 can be the difference of $3,500. You might also argue that difference in interest paid in the 10-year plan versus the 5-year plan is this amount of money, but at the same time, it's nice to see that you'll have this much saved and invested versus looking at the numbers of how much you're paying in interest. I also didn't even touch on anything about the student loan interest because paying those will have an effect on your taxes. That may be the case, but the lesson learned here is the sooner you start saving and investing, despite not being able to pay as much, is pretty important. On the other side of this, paying off your student loans is definitely a huge accomplishment, and I'm close to that too. Of course, the interest rate on the student loans in my example was 4%, and I do know there are some loans out there where it could be 5% or even more, and in those cases you definitely would want to consider paying those down aggressively. However, I did mention investing in a broad index fund, which is an average of 7% rate of return adjusted for inflation with dividends reinvested. 7% is pretty good. So if you are in a situation where your student loan interest rate is more than that, you definitely want to pay those off faster instead of investing. Or if it's less, then you might consider taking your time on paying down those student loans. Some of you watching this video, or maybe even most of you watching this video, are part of a population of people who have student loans that are federally backed, where they're currently in a moratorium. Payments are deferred, as well as interest rates going down to 0 until the end of September 2021. This has changed multiple times over the course of the last year. First, when it started in March 2020, it was extended to October 2020, then to the end of 2020 at December, and then to the end of January 2021, and now September 2021, like I said. You might be asking yourself, should I pay off my student loans? Should I only pay off some of my student loans? Or should I just not even pay at all? It honestly depends on the individual situation. Some questions to ask to evaluate whether or not you should or should not is asking things like, are you able to afford your living expenses? Do you have any high interest debt or any credit card debt where the interest rates on those could be 15, 20, or even more? Do you even have an emergency fund to afford a $600 or a $1,000 payment if anything were to happen right now? There are so many people hurting right now, and for the ones who do have student loans and are in that situation, it's definitely worth considering paying off the high interest debt, having that 3 to 6 months of an emergency fund to pay off if anything ever happens, like if you lose your job or if there's an emergency that happens, like you have to go to the doctor. Really consider this when you're paying down your student loans based on these examples, because if you do decide to pay down your student loans as fast as possible, those won't pay you dividends in the future, unlike investing or saving or paying off these other things like high interest debt or saving an emergency fund. But at the same time, I'm not a financial advisor, and this is just for entertainment purposes only. I've thought about all my possible options, and I've personally thought about this a lot, so I decided to just keep making the minimum payment, take a hybrid approach like saving and investing the difference, but also minimizing my monthly payments by modifying my phone and internet bills, or closing certain credit cards, or not closing, but downgrading those products, and also increasing my cash flow by taking on side hustles, part-time jobs, and any contracting work outside of my additional full-time job. With a busy schedule, it might be very daunting to think about all these things, but the reason why I wanted to make this video is because I think saving and investing, if you're given the ability to, should be part of your repayment plan. Obviously, if you have student loans, this video is for you, but if you don't, saving and investing is also a strategy that you should look into, and that's why I wanted to share this video. We also don't know what the future holds for debtors like us who have student loans. I mean, I don't think it is something that we should bank on where student loan will just be wiped out, but at the same time, if you have the ability to not pay your student loans because they are federally backed with what's going on right now, it's a useful thing to do if you have to catch up on high interest debt and saving your emergency fund and other things like investing. Congress and the newly inaugurated administration have given us till the end of September of this year. So right now, making the decisions to put yourself in a better position for later on is really key. And you really can't go wrong with either way. I'm just saying in cases where you pay off in 10 years versus 5 as fast as possible or taking the long route, saving and investing should be part of it. And it's really up to you to decide whether you want to do that or do not. So with that said, thanks so much for watching the video. If you haven't already done so, please remember to obliterate the like button, the subscribe button, and ring the notification bell so you know the next time I post a video on my channel. Here's my Instagram handle. You can add me there because I have fun there. You can have fun with me there too. If you don't add me, that's cool too. I'll still have fun. You can get started in investing with some of the links in the description below. One is to Webull, where if you deposit $100, you could get 4 free stocks where they'll total up to about $3,700 based on their current promotion. So check that out. And finally, check out the sponsor of this video, Millennial Investments.
Actually, I'm kind of the sponsor.
Totally kidding about them sponsoring this video. They're not, but they do have some really cool stuff like merch like this. They have articles and blog posts on personal finance, investing, real estate investing, and just because it is so sweet. Thanks again, and if you enjoyed this video or you learned something new, take that and get to work.
Bye.